This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacy-Marie Ishmael, managing editor of crypto for Bloomberg News. It's Friday, January 27th. One of the main questions we're asking this week, and frankly, one of the questions we ask every week in our reporting is, what's the latest with Binance, the world's largest crypto exchange by volume and by pretty much any other metric you can decide? As we reported this week, in a story written by my colleague Emily Nicole, Binance acknowledged that it had been mistakenly mixing the collateral it holds for some of its tokens in the same digital wallet as other types of funds. Now, this might sound technical and confusing, but we're going to talk about why it's important and why this kind of operational issue is a challenge for these exchanges at a point when both regulators and customers are paying really close attention to how this industry is managing its transparency. We'll also talk about the layoffs that continue to happen in crypto and how that relates to what's happening elsewhere in tech and in finance. And finally, we'll talk a little bit about the latest in regulation. I'm delighted to be in London this week, joined by my colleagues Anna Herrera, Bloomberg senior editor.
I am hearing actually from headhunters that it's not as bad as other years because there are still some firms that are still hiring, maybe the ones that came in and were a bit more level-headed.
And by reporter Justina Lee.
I was just looking at the correlation between the S&P 500 and Bitcoin, and it's still very much positive.
Anna, Justina, pleasure to have you join me in the London studio.
Yeah, thanks for coming and having us.
It's always a pleasure.
Thank you for having us.
Now, I have this theory that every time I travel, something bad happens in crypto. And that's held up remarkably well. And, so while I was in transit over the past week and a half, we had Genesis file for bankruptcy.
Genesis filing in the Southern District of New York. This only includes the lending side of that business, the spot trading and derivative side was not included in this Chapter 11.
We had a ton of reporting from our colleague Emily Nicole on various confusing situations that relate to Binance's kind of management of certain wallets and the tokens in those wallets.
Let's have a look at Binance as it acknowledges that it mistakenly kept some user funds stored with its own reserves. When questioned by us at Bloomberg News, Binance issued a statement admitting collateral assets were moved into the wallet in error.
Anna, you edited some of the Genesis stories, but also some of the Binance stories. So I'm going to ask you to just say in the least technical way possible what's been going on.
So with Binance, I'll give you the latest update that we had. Basically, Binance issues some tokens, which are versions of existing tokens. Because what happens with blockchain is that if you issue a token on a different type of chain, then that can run or work on another chain.
If somebody issues a token and it runs on Ethereum, right, they can't easily just also have that work on, say, the Solana blockchain.
No, exactly. And that's a big problem if you want to have an interconnected system. And Binance has its own chain. So they issue their own versions of tokens. And the rule is that for every token they issue, they should have the equivalent of the original token stored somewhere, right? So they're not just making money out of thin air or crypto tokens out of thin air. So what Emily sort of found out, or that she was told by a research firm, was that they looked at sort of the wallets where Binance keeps the reserves and they published them, and they had a lot more of tokens than what they'd issued. So that made it seem that the tokens that are supposed to be reserves for the ones it issues were stored in the same place as funds that customers put in on the exchange.
Which is bad.
Which is not ideal, because then there's no way you know what is what. And then if you're a customer, you want to withdraw, or if you don't know what's where. Or at a minimum, it's messy. And also, it doesn't follow the guidelines that they themselves say they will do. So, Emily flagged it to them after the other report came out. And Binance said, yes, they admitted that there was an error. It was a mistake. It was an operational sort of issue, and they were fixing it. The same analysts flagged that there was less backing for another coin, Binance's own version of another coin, a stable coin that that is issued by a bank called Paxos that though has Binance's brand name. So again, it's quite technical, but I guess for a listener, what you need to know is that, Binance has been talking a lot about being transparent and, called out FTX for
lots of things.
Yes, exactly. But it's also facing operational challenges. It's a big little mistake if you want, right? Oh, oops, we kept the tokens in the same place. We're going to fix it. It's like what's 500 million worth of tokens we're talking here. And it's kept in a wallet that stores 16 billion worth of tokens. So it's just like a bit confusing because if you don't segregate customer funds, I guess they're both customer funds, but you have to distinguish between customer funds and the exchange customer funds because they back tokens that you issue.
And Justina, this is all happening in an environment in which, as Anna mentioned, Binance has been out ahead and calling for transparency, but also pretty much everybody else who's scrutinizing crypto right now is saying you'll need to get your act together as it relates to being able to be very specific about what you hold, what the risks of those exposures are, how you know what those risks are, where customer funds are, and so on.
Yeah, that's right. And I think Binance really is at an interesting crossroad here because FTX's collapse has really left them as the last giant standing. I mean, they grabbed a lot of market share from FTX, and now they're by far the largest crypto exchange. And so they've come under a lot more scrutiny. And you could say we haven't exactly seen that kind of existential risk, with FTX. Binance would say they've survived higher withdrawals over the past few months. But kind of as Anna has talked about, I mean, we have seen some cracks appear under close scrutiny, from the accounting firm Mazars kind of withdrawing from crypto attestations in general, after they did Binance's so-called proof of reserves report. And also these issues with, those wallets that Anna were talking about. And so I think CZ is definitely treading very carefully at this time.
Because none of what either of you are saying is nefarious, right? Like, it's hard to keep on top of wallets. Accounting firm's going to accounting firm, and they are entirely, they can decide at any point that they want to be participating in an ecosystem or they don't want to be participating in an ecosystem. I want to go back to something that you said about all this, though, Justina, which is that Binance is by far, orders of magnitude, the most systemically important crypto exchange in the world. And that is bringing much more scrutiny than perhaps they are used to or necessarily want. And it's also bringing regulatory attention. Where and how is Binance regulated?
Wow, that's a great question. That probably doesn't really have an answer because their policy all along has been to kind of be this global exchange on the internet that's not really based anywhere, that doesn't exactly have a parent corporation. And that's been kind of helpful in terms of, not really being beholden to any particular regulator. But as regulatory scrutiny increased in recent years, they have tried to change that by starting to set up local entities that actually try to register with regulators. But they've kind of had a few setbacks in this area. Obviously, sometimes it's the problem of regulators not exactly knowing what to do with them, but sometimes it's also that Binance is not necessarily ready to make those compromises. And I think it'll be interesting to see where we go from here because at the same time, rules are starting to tighten. So will Binance be able to step up and change their internal operations fast enough to match that? I think that's not clear just yet.
And to your point about rules starting to tighten, just in the past couple of days, we've seen the French, who love voting on things, vote to kind of tighten up in one perspective some rules that are governing cryptocurrencies. But on the other hand, it's like less stringent types of policy than some folks were expecting. And one of the things that CZ was talking about on Twitter recently was this, he was kind of endorsing this idea of the need for a global aligned policy framework, which has very much become like the talking point of regulators everywhere, right? But for what I'm hearing from you, Justina, is like Binance is almost the opposite of operating under a global regulatory framework, where they've either taking the position that we are everywhere and therefore nowhere, or we have these specific local entities that might be, compliant with laws in Germany or in Spain or in the US, but there's no kind of overarching crypto overlord to whom they are beholden.
I think a lot of people were quite surprised when France actually gave Binance like a registration of some kind. And they've since kind of faced a bit of backlash with that. And that's why they've kind of been talking about possibly even imposing mandatory crypto licenses. Mm-hmm. And the vote you talked about falls short of that, but it does require, more stringent conflict of interest management rules and kind of more rules in general like that in order for entities to get registered in France. Mm-hmm. And so I think there's a question of, whether Binance will remain registered under these new rules. And also, how much do regulators even know about how these crypto exchanges work and how do they even monitor compliance?
We'll be right back with more of the week's top crypto stories from Anna Herrera and Justina Lee. I think one of the nuances that folks in crypto are finding right now is they're very much where the banks were in 2008. Not necessarily in terms of the systemic risk of anything, but in terms of the fact that customers have lost money or lost faith or are starting to lose faith in the ecosystem. And that's a challenging place to be. And one of the ways we've seen industry respond is by just laying people off.
Gemini Trust Company, the firm founded by the billionaire Winklevoss twins, is cutting another 10% of its workforce, adding to the wave of job cuts across the technology, fintech, and crypto industries at large.
Justina, you have reported on finance for a long time, and you've been through these sort of waves of job cuts and people being like, oh no, I didn't get a £1 million bonus this year. But I think this level of retrenchment is relatively new for a lot of folks who came into crypto in the past 2 years.
Yeah, that's right. And it's kind of funny because I guess a lot of them probably came from tech or finance as well. And now they're realizing that crypto itself is not in a boom cycle forever. Mm-hmm. And there are actually quite a lot of parallels between the crypto and the tech retrenchment that we're seeing, in the sense that I think both industries probably overextended during the boom years and are now forced to cut back. And also in the sense that they've both, in a way, suffered under these interest rate increases, mm-hmm. which is a bit ironic for crypto probably. So I think it'll be interesting to see where these people end up because, tech is not really hiring again. And finance is definitely not expanding either.
And Anna, this is not your first crypto window. So as you kind of look out with, the benefits of hindsight, where do people tend to go after these sorts of things happen? So
I think the difference, as Justina was saying, is that in all crypto winters before, everybody else was fine. So mm-hmm. you could get laid off and go find a work as a developer for Google. There's was a fiercely intense battle for talent. And maybe that hasn't really died down. I'm not really sure because, you're still building websites and you still need AI and you still need, developers everywhere. It's not like that's gone away. But maybe you have some of the fat. I love watching videos of employees from big tech firms on TikTok say, this is I don't know if you've seen them, but this is a day in the life of a Google. And they're picking breakfast and they have half a meeting and then they go pick snack and then, so maybe that's not the actual core people that they need. So some of them may be super highly skilled blockchain developers, of which there's still not many, right? Because this is a new technology, will probably find place, but it won't be as easy. And I am hearing actually from headhunters that it's not as bad as other years because there are still some firms that are still hiring, maybe the ones that came in and were a bit more level-headed, perhaps ones that were funded by or arms of banks or other sort of more or less Wild Westy kind of vibes. So that might be a place, or maybe they'll launch their own company. Sometimes that's what happens. Maybe they start launching their own companies because some of these people have money stashed away. And so, often you do hear that when there's moments like this, people start building new things.
I can't believe we've got to it's time to build.
Yeah. I'm thinking the problem is who are they going to ask money for? But there are all these giant funds with all this money that's just sitting there.
Just as a kind of a closing thought, we are ending January because time is a fiction. And in what is a kind of a classic of things that happen in media, one of our colleagues, Mike Regan, wrote, a very smart story about how Bitcoin and crypto markets more broadly were starting to benefit from the January effect, and like most other equities were rallying. And as soon as we published the story, everything went down. But Justina, I appreciate that you mentioned kind of the interest rate environment at the top. Are there any other like macroeconomic things that you are tracking, whether sentiment around the interest rates, whether the state of strikes in the UK, that you think might be affecting sentiment more broadly across crypto?
Yeah, maybe before I came in here, I was just looking at the correlation between the S&P 500 and Bitcoin, and it's still very much positive. And obviously, that's always been a bit ironic because after years of Bitcoin enthusiasts talking about how it's an inflation hedge, it's kind of turned out to be the opposite. Mm-hmm. Obviously, I guess that's partly particular to this macro environment and the fact that crypto is held by a lot of retail investors that get scared as soon as they see that their stocks and bonds are also falling. And so it's kind of become, this fact that if you want to know where Bitcoin is going, you need to know where risky assets in traditional markets are going. And it does seem like they're headed for a better year because with signs of inflation peaking in the US and perhaps even slower economic growth, the Fed will slow down interest rate hikes. So that should be good news for crypto. So funnily enough, everyone is still watching Jerome Powell.
The most powerful man in markets. Well, thank you, Anna. Thank you, Justina. Appreciate you joining us.
Thank you.
That was Bloomberg senior editor Anna Herrera and Bloomberg reporter Justina Lee. You can find more of their work on the Bloomberg terminal on Bloomberg.com. And if you check out our twice-weekly newsletter, Bloomberg Crypto, you'll find them there too. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacy-Marie Ishmael. We'll be back tomorrow.